Burgess and Bolton's weekly wrap-up. Hello, everybody, and welcome to Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation, and this week we've got an interview with John Muir as he's retiring from the industry. But first, Ben, let's start with the news. So big news this week, Hiscox, but it's only a rumour.
Yeah, well, so what it started off with was an article in the Insurance Insider, which was described as a scoop on the potential for Hiscox being the subject of a takeover bid from the two companies named are Sompo International and Generali, the Italian company. So foreign investors, foreign insurance investment, basically coming into London. So the basis of the story is that these quoted insurance stocks in the London market are undervalued currently, and therefore will be attractive to these overseas investors. And Hiscox was, according to the Insurance Insider, in play. And so obviously that meant that the share price spiked, as it said here, went up about 15-18% or something at certain points. And we all thought, that's interesting, it's all going to happen. But actually, as it says here, there was there was no announcement from Hiscox, so they wouldn't say anything, which is an indication that there are no actual formal approaches in place, because you have to be transparent if there is or there are.
Yeah.
So it looks as if this is more of a sort of, this might happen. We've heard a few whispers about it, and these are two players. I mean, I think Deutsche Bank analysts subsequently said that it's not surprising because of the valuations of these businesses, and also that they also felt it was very unlikely that Generali would go for this, as it had ruled out takeovers. But of course, they could say that, and then it could still happen. But that's kind of it, which really left kind of Sompo as potentially the main suitor for Hiscox. So that's all well and good and quite interesting. It means that Beazley is also in play, and I think it was said that again, I think the Deutsche Bank analyst said that Beazley would be the more attractive of the two players. There had been, as you know, questions over Hiscox in terms of its profitability or its consistency around its retail business, in terms of its profitability there. So while it has a well-known brand and all that sort of thing, it has also got a bit of baggage from the BI claims stuff in COVID, and so it's a sort of interesting business, Hiscox, as I guess lots of people, if they're listening to this, will know, and quite a thing to take on, even though I guess at a 4.3 billion valuation, it's a pretty significant merger if that happens, and would certainly change the look and feel of the London market, I think, if not the market in the UK generally, I think. And obviously they have a bit of a US business too, so it's very interesting. I tend to feel that more than just Hiscox, it may be that Hiscox is in play more because it's the lowest valued of the other players, and there could be all sorts of discussions going on, I guess.
So this is quite interesting, because you started off by saying that the reason for the kind of rumor is kind of the low valuations of these companies, and can we just explore that a bit more, because it's I don't know what is the reason for that. Why do people feel they're kind of undervalued currently?
Well, they've been low. I mean, one of the reasons is the profit history of the businesses. I mean, they have been somewhat up and down. They're quite exposed to obviously volatile risk, and so that's one of the reasons. I think the other is I think just the very fact they're quoted as UK players on the UK stock exchange, on the London Stock Exchange. They're not seen as these kind of big international players that you would get if they were the just bigger players, like even I guess I was going to say a Chubb, but they're huge. But I mean, the sort of players that would be kind of mid-large players, but were kind of much more international. They're more complex to purchase. They have more potentially more opportunity, I guess, in M&A terms than what would be seen as a London-based operation. But of course, if you look at Beazley has a substantial US operation. Lancashire less, so it has a Bermuda operation. It has a London syndicate, everything. So they are. They're seen as good businesses, but a little undervalued. So they'd be like an additional acquisition to a business. They would not be seen as, not really a true merger, I guess, in a way. If let's say Sompo, which is the one that's supposedly looking at this. I mean, Sompo is a massive Japanese business, international, big even in London. So it would be bolstering up, from a Beazley purchase and even a Hiscox and a Lancs, a very much a London, market type of purchase, which obviously is, an international US type P&C business. And they'd be buying into some of the US, but they might equally argue, Sompo, I don't actually know offhand how big Sompo is in the US, but that could be of interest to them. But they're not buying it for an international acquisition, if you see what I mean. So so they're just Lancashire has had very good times, as has Hiscox. Beazley has a much more consistent profit record, but equally they're all seen as kind of quite exposed to the volatility of cats, cyber, as et cetera, et cetera. So they're somewhat undervalued, and they're the returns. I mean, if you want to take it very simply, the returns have not been as big as some other players in other bigger businesses.
Of course, I could have predicted that there would have been a move for Hiscox because I sold the Hiscox shares 2 years ago. So, as with all my forecasts, I didn't
like to say that, Jeremy. That was the other reason I was thinking that it was mentioned in one of the analysts' articles. Yeah, that a major,
the major move
shareholder, but probably one of the more. Well, I think they called it an unintelligent shareholder had dumped the shares at the wrong time. And, that had left them very much open to this acquisition move.
Yeah, that's, as you know, never follow any advice on this show.
Well, yes, because shares can go up or down, particularly down if they're in your control. Let's go
down. Yeah. Oh well. So very good. Let's move off shares and let's talk ESG, Ben.
Yeah. So, very different topic.
Very different. Actually becoming more relevant in valuations of companies, as we've talked about in the past.
Yeah, I thought I'd throw this in the mix because it caught my eye, one, and I think we're looking as a business a lot at ESG at the moment and where it is. And so it was kind of topical, but this is a good little report I'd recommend from Thomson Reuters, which is kind of a tracking of what's going on, if you like, in a very simple terms. And I thought we'd just chuck it in and see, because I think it is interesting. You're right that it is becoming quite important in terms of the corporate world. And I guess the question here is it likely to become more important? And we've touched on it before as to whether there is this backlash against it and so on and so forth. And we all know it's a very messy kind of area with, all sorts of kind of tentacles, I guess, in terms of how it, what you're talking about, and it's the way it's measured is tricky, and there's greenwashing as well. So, in some, there definitely is, according to this report, quite a build on the corporate finance front in ESG. So, in other words, it is becoming more important in terms of acquisitions. So, they're they're saying that, you know, for lots of different reasons, it is just becoming more central as a consideration in corporate finance, and raising capital or whatever. There is a increasing pressure not just on publicly quoted companies now, but also apparently on private companies to report their ESG credentials. And 60%, some survey which was quoted in here says 60% of businesses worldwide in that kind of larger private sector are saying that they feel pressure now to respond and make changes in their business around climate, environment, and so on. So businesses are certainly very aware of it and feeling that pressure from external parties. And I think to bring it home, you know, in London, certainly this last week or two, you know, I've been in and out of office where I've had to wait with security, you know, set up because of potential protests. So you do feel for sure that this is, you know, insurance for certainly it's a sector that's under pressure. But this whole awareness thing, I think, is there. So that's one part of it. They reckon that the politicization of ESG will ramp up towards the end of this year for obvious reasons. French political situation, obviously the US in terms of Donald Trump, and there's been apparently a recent asset management issue where asset management companies have been hit by the regulator because they were colluding with corporations to kind of reduce the transparency, if you like, on emissions and things. So, you know, in a way you could say that's a bad thing, but also it's because clearly these companies are getting quite worried and scared. They're having to try and cover things up, or, you know, on transparency. Biodiversity apparently is becoming of increasing importance to companies. It's also being valued within global economies as to how important that is. If you don't get it right, it's a massive, huge, great loss in economic output if biodiversity kind of goes wrong. Focus on supply chains is growing around ESG, so checking, you know, due diligence around those supply chains in terms of human rights and environmental issues around those. So again, pressure on checking companies and being transparent about what they're doing on that. Greenwashing claims, which is always kind of one of the more interesting areas, I think, are on the rise. So it's apparently becoming more clearly defined legally, so that the governments are now able to very clearly. There's been some UK laws recently on again on investment companies and how they describe their sustainability credentials. You know, and some of them have been told that they're not, you know, what they're saying is not correct and can't be legally acceptable. So there are more severe repercussions as well, apparently, down the line for this sort of greenwashing and claiming you're you know, sustainable or your ESG is good when it's not. So what's the upshot? The upshot, I think, for Thomson Reuters anyway, in their conclusion, is that these ESG factors are all becoming central or an integral part to the operations of companies worldwide. So not going away. There's definitely some opposition. It's definitely very messy, but ESG is kind of here to stay. It's going to be more and more important, and it's getting, you know, gradually things are being worked out, and it is going to be part of company strategy going forward. So, you know, if you're into that sort of thing, if you're into a bit of ESG, quite positive.
Yeah. We are.
If you're Donald Trump, I guess you won't see it as positive.
No.
At all.
Not at all. No. We are. We have been for a long time. So as you know, we support a charity called Stump Up for Trees, and we're very conscious of the carbon footprint of our events, and we try and offset that. Well, we massively offset it by donating to plant trees. And I think delegates as well, when we tell them, you know, we've planted a tree for them, and, you know, should feel good.
We get that. We do it off surveys, so we plant trees off the back of each survey done. So we've done that, and a lot of, you know, respondents, as we call them, who do the surveys, do say that's a really good idea. They like it. Yeah, it is definitely good. It's really good. It is important.
It is. Good. Okay. Right. So, final bit of news. I also saw this, which is the potential for attacks on the Paris Olympics. And so this is it's funny that they take the AI kind of angle on this. I've also seen kind of the terrorist attack angle as well. It's hardly worth thinking about, but yeah, it's interesting, isn't it? If they have to kind of trigger these policies in the event of something like this taking place.
Yeah, well, I mean, it's kind of interesting because Allianz, I think, for example, is one of the main sponsors of the Olympics, and so as an event, I think insurance is being seen as pretty central to the success, I think. So I thought at one level it could be a good news story for the industry, the sort of thing that you would imagine the insurance industry could talk about in terms of how it helps with things like this. It hasn't done it, sadly. As ever, we kind of miss the opportunity, but it is in future. I think it would be interesting. And so, yeah, I think they pick up on obviously the potential kind of Islamic militant attacks, and also and given the French political situation, that isn't surprising, but also AI hacks. So I don't know what cyber attacks would do. They may change the timings of a race or something.
Maybe a bit
like, so you didn't do it in 10.1 seconds, 100 meters. You actually did it in 14.3, unless you pay us a ransom.
Wow, that would be something else. I just got a flashback to kind of the track and field arcade game that you had to hammer on the buttons to make your athlete run.
Yeah.
That's what it'd be like when you watch it on telly. You're just going, what's happened? Oh, it's been hacked.
Okay, so one of the reasons also for this, I noticed, is one of the fruits of my loin. The first fruits of my loin. My eldest son is a reporter. He's one of the chief reporters at the Olympics. So we may be able through these Olympics to get a bit of an angle, an inside track behind the scenes, because he's got access all areas. So watch this space. I'll try and purloin a few little nuggets.
Good. Well, we'll keep an eye on that, and it's actually really exciting. Olympics this year. So last week we met with John Muir, who was Willis Managing Director of Technical and Operational Practices. Snappy job title, but stalwart of the London market, been around 50 years. And we wanted to kind of reflect on his time in the industry, what he sees as being the big achievements, but still the challenges. And so we've split the interview into a number of smaller kind of bite-sized pieces. This is the first installment, so let's play the video and then we'll come back and reflect on what he's got to say. So John, welcome, first off. Delighted you can join us today. Perhaps we can start by just reflecting a little bit and your take on some of the big changes that you've seen, some of the big events, I suppose, that you've seen in the industry and how that's impacted the market. And then, as I said, we can look to the future. So what are your kind of reflections on 30 years in the London market?
So, Jeremy, Ben, thank you for inviting me today. I knew you were going to ask questions like this, and so I've given it some thought. And I'm reflecting back on a 49-year career as an international insurance broker. 46 and a half years of it have been spent working in the city for just 3 firms, mostly at Willis, or WTW as we're now called. But I was also a Lloyd's cover holder in the States 2.5 years, which was a wonderful experience too. So 49 years is a long time. I think it's worth reflecting on what it was like and what's changed. So I don't want to dwell too long in the embers of the past, because I actually started in September of 1975 in the city with a company called Stuart Wrightson. And in Fountain House, which is about to be destroyed, on Fenchurch Street, And I quite quickly got into the fact that I liked insurance broking. I'd actually been invited by a number of different things to go and look at things to go and do. And because I speak bad French and appalling German, but I'm good at maths and have good attention to detail skills, I just had a hunch that insurance would be the kind of career that I could actually prosper in and actually enjoy. You ought to do things that you're good at in life because you enjoy them, and then that makes 49 years go by very, very happily, which I think is an important part of a career. So what was it like in those days? Well, it was pretty messy. It was so paper, and everybody thought that they were working very hard. Actually, interestingly, back in those days, everybody seemed to start at 9:30 and leave at 5:30. So I always remember thinking, how could I distinguish myself at a tender age? All I had to do was turn up a bit early and leave a bit late, and I'd get noticed. By the way, I did, really very quickly. And I used to handwrite slips. So there's a lot of stuff. The way everybody communicated was something called telex. None of you would remember it. Everybody thought telex was cutting edge. Goodness gracious me. So the market has enjoyed incredible benefits through technology. So that there is no doubt about that. But the market's had some really quite difficult periods through my working life. It's worth reflecting on what they were and why they happened, and what's been done about it, and why I feel that I'm leaving the market 49 years later with it being so considerably in a better place than it was. So in those days, the market had about 200 managing agents or syndicates. Most of them were managed by brokers, which a lot of people wouldn't even know. And it was only around in 1981 or 2, there was a regulatory change which basically said brokers could no longer own managing agents because of a perceived conflict of interest. That was mistake number one, which we still suffer from to this day, because when that was decided that everybody should basically detach, nobody thought through the fact that actually what the Lloyd's, so most of the syndicates basically just did an MBO. They just bought themselves out from the brokers. But everybody kind of figured that otherwise we'd just carry on as before. There was already a bureau for central settlement and for claims. But actually, brokers still carried on doing lots of things for underwriters, which they never do anywhere else in the world. Creating the contract, calculating the premium, calculating the insurance premium taxes. We've just carried on with this historical process. There's nowhere else on the planet, by the way, where the customer performs the services of the service provider. So the equivalent of this is to go to a restaurant and at the end of the meal, the waiter to give you a menu and say, well, you know what you ordered, don't forget to add on 20% VAT and add on a 15% tip and work it out for yourself. And then when you have a go at it, they come back and say, no, you got this bit. We've inherited this process which was, so some of the thinking behind it was sound. Underwriters should concentrate on underwriting. I get that. But actually underwriters also need to embrace back office, which they don't. They should embrace something called credit control. I think the world would be astonished at the laxity of credit control within the underwriting environment for global wholesale business. It's so bad. So when people talk to me about the cost of Blueprint 2, I laugh about it and go, to be honest, if Blueprint 2 could just improve credit control, which it should do, everyone's going to make their money back so quickly that they won't believe it. But I don't get some of these things. And you don't want to get me started on how bad we are at paying claims. we're so bad at paying small claims. We're the worst on the planet. The worst on the, I kid you not. And I can tell you from a Willis standpoint, our network offices don't really like dealing with London unless they have to. And it's largely because our payment of small claims is so slow. In the rest of the world, claims get paid in 5 working days because that's typically how money moves in the financial world. And that so rarely happens because we're still using the same processes that we've had really for about 49 years.
And do you think, John, that the status of claims is partly the reason why this has never really been properly addressed? It's always kind of been, as you say, a kind of back office or a mid office function, and and it's still to some extent true today, isn't it? That's how it's viewed. It's never whereas actually for the customer, the payment of the claim is such a symbolic moment.
I don't know. I think it's a funny thing. So we had a terrible problem with the timely issuance of policies. So really, I got sucked out. For the first 30 years of my career, I was an insurance broker, which I really enjoyed. And I love insurance brokers. And being an insurance broker is immensely satisfying. You get to deal with clients, you understand their issues. It's highly specialized classes of business. You deal with underwriters. A lot of the underwriters are your friends. You've got to run P&Ls, which is important to make sure that you can make money. And you've got all these things going on. I loved it. And then in December of 2004, I was dragged away to go and do contract certainty because the powers that be at Willis perceived that to try to change the market required, it was never going to get done by compliance or legal or operations. The conclusion was we needed a broker to persuade brokers to change their behaviors. And that was a huge change. I mean, people think it was all done because of 9/11 and the absence of an agreed policy wording in totality. It's not true at all. The regulator was constantly having to deal with complaints where people who had claims, the underwriters would deny liability because it wasn't covered, and the client would say, well, I haven't actually received my policy, so I don't actually know what is or isn't covered in minute detail. Contract certainty fixed that. So, and I would, if you said to me who would I give the credit to for that, so a lot of people give me the credit, they shouldn't do. The credit goes to the regulator, because they put a gun to our heads and went, if you don't do this, we're going to turn you into what we've done to the banking industry. Yeah. And that kind of scared a lot of people in EC3, rightly so. So we fixed that, and we fixed policy issuance, and it's remained fixed. And at Willis, we still measure it and report on it every month. Without fail, we train people on it. The code of practice is still something that's very important because it's one of the few documents out there that actually says, it's only 12 pages long, but it tells you how to do things. Where's the claims code of practice?
Yeah, too right.
So there isn't one.
No.
Funny enough, I've set young graduates who've been working for me the task of trying to write a claims code of practice. And they've given it a go. And obviously you give them the contract certainty code of practice, and then, but actually, if you ever said to me who would need to do it, you'd need to have some very, very experienced people. This is not something that bright kids are going to fix, because it's complicated. We put some really good people on the pitch to fix policy issuance and contract certainty, but I'd throw that out as a challenge to the market when they're thinking about what they should be doing. If you wrote the stuff down and agreed what the standards should be, then actually, then that would be something that everybody could subscribe to. But we don't do that. So because, and just so you know, the reason for it is that the complacency within the claims community is so immense. They're also totally convinced that they're doing a great job because they pay these huge claims really quickly in a way that satisfies really big clients enormously. and they say, you know, what's the problem? But actually the problem is all the small claims. That is, not all of them, because we've got tons of clients, big clients, who couldn't care less. You could pay them a small claim a year later and they'd just shrug. They'd just see it as accounting. But that's not, if we want to seize our opportunity for the future, which we could do with technology and strategy, in my opinion, we could grow the premium income for the London market extraordinarily if we could fix claims and ANS. ANS is also, I've told you about credit control. So virtually any business that invests so little effort in its credit control would go bust. Did you know that? So it tells you how rich underwriters are. They're so indifferent. They put a settlement due date on a contract. They could put anything they like. They just ignore it. There's no follow through. There's no real system. The bureau really don't do very much on it. They might report on it, but if you were running a serious business, I promise you, you'd have credit control right up there.
So Ben, it was a great interview, and this first instalment really kind of focuses on kind of his starting out, coming into the market, and some of those challenges. And of course, he's been around for so long as he's been part of a number of market initiatives.
Yeah, and I think John is, for people that don't know him, his demeanor, if you like, belies what he's achieved in the market. And I can just say that, he is going to be clapped out. He'll be the first broker to be clapped out of the Lloyd's building in a couple of weeks. He's that important to the market. So this is gold, really, in terms of what he's talking about. And I think you can always write off the past, as another country, as the poet once said. I think, though, that what John is talking about here is incredibly kind of in the present and about what the challenges are today. While he says there are lots of improvements and things a lot better, some of those challenges that he sets out there are definitely things that we could look at. And in fact, we might be indeed talking about at an event today. But yeah. What do you think? What were your kind of takes?
Yeah, I thought it was really interesting when he was talking about kind of the telex and how that was at the time kind of cutting edge technology. And you kind of think now when we have our London Market Claims events or we run Tintech London Market, and actually a lot of the conversation is how behind they are with technology now. So that was quite interesting. I think the other really interesting point was around kind of claims. And it's something that we are both interested in, and that area of still being really poor at paying small claims. I thought that was really interesting. Yeah,
John has had that as a topic, and it is really key to the market's future. I think is that claims is about ultimately settling a claim reasonably quickly, and when there is a very obvious difference between this market and the rest, and actually, as he says, a very obvious opportunity for the market to, with the technology, move forward and actually pay these claims quickly. That is symbolically very important. I think I kind of mentioned that in here, and it matters really to the brand of Lloyd's in London very much, but also the insurance industry as a trusted industry. I think it would help as well, because I think that's where you have to raise the bar. The other thing I think about John's whole interview is not just about John himself, but how history forms, or has formed, where we are today, and how you can get that kind of, misinterpretation, if you like, of what you think has happened in the past, or in fact what has actually happened was very different. So the couple of things there. One was the shift from broking businesses owning managing agents, which I didn't really know about, and still now today having responsibility for a lot of the back mid-office functions that John believes, and probably right, that the underwriters and insurers should be doing. So this is quite a messy situation in lots of ways, but it is what it is. And I think the other is around the lack of commerciality as an industry, if you like, around things like credit control and stuff like that. So we have got at very fundamental level, things that need to be sorted out in the structure to enable the innovation to happen. So it does, interestingly, make Blueprint 2 and other things put it into a different light. And the other point, I think, is how important the regulator was at various points in forcing change. And I think that's often overlooked in markets, because obviously everybody in a market tries to avoid the regulator like the plague. Everybody moans about the regulator. But fundamentally, governments and regulation really do decide the direction of the market. And at the moment, we've got consumer duty and other things going on. So there is a lot of, you can't ignore it at your peril, I guess, is what I think we should think about. And try and get ahead of the regulator to some extent, because often they're focusing on things that are important, that are fundamental. There are things today that we know about, like delegated claims, certainly around how you deliver value to the customer and outcomes and things like that are being focused on for a reason. And if you don't, get up on the program with that, the industry could be again forced into doing things. So it's very, very interesting. And there's a lot more to come out of this interview. So it's very good.
Definitely. So we'll be playing more of the interview over the next few weeks, and then we'll put the whole thing up for you to watch in segments or in one go, or however you like to listen to these things.
We'll put it up on InsureIndex and various other places.
Good. Excellent. Right. Thank you, John, for that. Right. Let's move on to London's leading underwriters, Ben.
It's back.
It's back. Another card. Can you believe it? It's come around again.
Only yesterday it seemed like it was 2023, and now it's 2024. And the London's leading underwriters report is out next Tuesday. There will be a few articles coming out on this in the Insurer over the next few days, and then it will splash out further and further. I can tell you it's a very interesting report, not just your usual suspects in terms of the iconic underwriters you'd expect to see, but also quite a lot of new, younger, arguably underwriters. We showcase the women's group as well and give a bit of updates on what's happening on that side of things, and how the underwriter cohort is developing. In I think a time when the demographics have changed a bit, particularly in terms of age. So this is a moment in time, I think. So quite important. So report will be available to download from next week, and we can talk about it over the next couple of weeks, because there'll be quite a big splash around this, and people talking about it.
Good, excellent. Looking forward to that. Will there be an awards, Ben?
There's not an event this year, because what we're going to do this year is basically kind of because there's so many, we're going to do kind of photo shoots and things like that, and we're kind of relying more heavily, I think, on social media and all the various platforms. So Slipcase is a partner on this, the Insurer, we've got our own InsureIndex channel, and we're even collaborating with other different parties. So we're really trying to use the kind of digital channels more than just a physical event. I mean, we will have some physical handovers, which we're doing, which is people like to see. So that's the way we're going.
That's fine. I thought you were going to say because I made such a mess of it last year that you're not going to do it.
Yeah, that was one of the other reasons. That was one of the other reasons. Yeah, we can't trust humans anymore, so we have to go to digital channel.
That's it.
They mess things up. So we looked at the AI option, but we didn't feel that was quite up to speed yet. The replacement fake Jeremy.
Yeah, I'm looking forward to that. For those who don't know, there was a lag, wasn't there? When I hit the button, there was a lag, so I hit it twice, and I revealed a winner
before announcing it. Yeah.
Before even announcing what it was for. Anywho.
Yeah, well, I mean, look, that's fine. I mean, guess what? I mean, it can go far more terribly wrong in the digital domain, I can tell you, as you know.
Yeah.
Like, you can reveal the whole lot without knowing it.
Okay, let's wrap things up. So, Ben, what are you doing this weekend?
Oh, I guess I'm going to have to watch the football.
Come on, it was good. You've got to admit it was good. We were good. That first half was very good.
Look, I mean, I'm going to go slightly pour a little bit of cold water on it. It was 15, 20 minutes of one half. It did get turgid again, and then it got good. I'm still struggling a bit with the, I don't want, not the whole 90 minutes, but a bit more than 20 in a game. But no, it was good. And of course, everybody now with hindsight says that his substitutions were inspired and so on. So that's all the record books will say. Yeah. And good luck to England. I mean, I think, yes, it's good. Yeah.
It's good, and against the Spanish, who are by far the best team of the tournament. So it's a good match. You got to beat the best teams, haven't you?
Yeah, it's very interesting. I mean, you've got really essentially two Premiership teams playing, isn't it? One another, really. I find it strange this idea of countries these days seems to be secondary to what you're actually seeing, which is just another combination of Premiership players playing each other.
That's quite funny. What we were talking about this a little bit, but because our kids play FIFA, and you can play international teams, and basically you can construct teams and tournaments from anything. They've got a real handle on all these international players because they play them on FIFA. Yeah, so exactly. It's quite interesting how those kind of personal brands are kind of
they're incredibly strong. I think that's true. Yes, I think my 16-year-old who doesn't follow football as much as he used to, but because he plays FIFA, he knows, every player and who they play for and their kind of history and background. Yeah, that's exactly where it is. Yeah, it comes out of the FIFA games. Yeah, so it's the other one I think I'm going to be watching is obviously the Tour de France, because that is really, really now very interesting.
Yes,
in terms of probably the two best riders of the last, maybe ever actually.
Yeah,
battling it out over the mountains. So that's going to be brilliant.
I am. I'm lucky enough, rather, to go to the final two stages in Nice.
Yeah, so you're going next week then, or is it the week after?
This time next week I will be there.
Okay, so we will have to do a pre-record, won't we, next week?
Or maybe I can report live from the mayhem that will.
Yeah, you can. You should do that. That would be great. Yes, that'd be fantastic.
Maybe I will drop in.
Get that on. Yeah. You could be like Sean Kelly or somebody. Report. Yeah, or Robbie McEwen.
Yeah, I could be.
Irish accent, Australian accent.
Yeah, that would be. No, you don't want to hear my accent.
I don't know. I'd give it a go.
Okay. Okay, good. Thanks for tuning in, everybody.
Have a great weekend. Good luck, England. Good luck, everyone else.
It's coming home.
Well, maybe. Bye.
Burgess and Bolton's weekly wrap-up.